The following panel is going to about the hottest topic in town, real estate in Vancouver. And I'm going to introduce one more time about our distinguished guest here. On my right here is the Mascot's president, Mr. James Gu. On my left-hand side here is the Professor Thomas Davidoff from University of British Columbia. And further there is Mr. Shi Hao, and he's the chief representative from the Agricultural Bank of China. And welcome you all. Our panel is going to be in English. If you need the translation, you need to have our earphones, and our simultaneously translators will give our Chinese translations right away through the earphones only. So we're going to talk in English only. 如果您需要中文翻译的话，您需要戴上耳机。谢谢。So our panel going to start with the hottest topic right now. Almost everyone in the room already knows that on Monday this week, the biggest news, almost made all the headlines here, is the raise of the property transfer tax for foreign buyers. I know in this room there are foreign buyers, Chinese buyers of the house, and you probably has already been affected by these new policies. So my first question is going to Professor Davidoff. What do you think about the new policy? Do you think it's a huge impact to the real estate market here in Vancouver?
Well, that's a terrific question, and thank you for having me. And you know, I do all these interviews, and I can speak about what will happen in theory, but it's so important for me to get to meet members of the Chinese community here, because the question is, what is going to be the response of the Chinese buyer, which is, of course, the dominant foreign buyer at this time. So there's a range of reactions that might occur. One is, I got plenty of money, what's another 15%? That's a great outcome, because then it would be about $1 billion of revenue to the province every year. The market continues happy. Homeowners continue to see probably price increases as immigration in different forms continues into the province. And I really think that's, from a public policy perspective, exactly the right response. You know, when investment comes into a province, that's a good thing, not a bad thing. It's only a bad thing if you fail to distribute the benefits in a way that's politically sustainable. And the benefits have not been distributed in a way that's politically sustainable before now. So that's one possibility. Okay. A second possibility is we hear funny stories about Mr. Edison Washington.
Which is a fake name.
Yes. Which reminds me of a joke, but we'll talk about that after.
All right.
You know, there's so many ways that one can shelter one's identity, friends and family, corporations. So another possibility is nobody pays any tax, or most people don't pay tax, but they continue to buy in Vancouver. Other possibilities, forget it, I don't want to pay 15%. In which case, I think there could be considerable impacts if people decide to go to Victoria or Kelowna with their money, or Toronto or Seattle. I believe, look, if there were no foreign buyers in this market, I don't see how there would be less than a 25 to 50% correction. Okay. On the other hand, if Vancouver continues to transition to become the nicest city in China, I think prices are still considerably lower, inflation adjusted, than they will be in the future. So it really is up to the Chinese community to determine what the impact will be. And I cannot predict that behavior. Just sorry to talk too much, but we just have not seen extremely affluent buyers from a foreign country faced with an enormous tax before. Mm-hmm. So we just have a lot of uncertainty about what the response will be.
Great, great. So all the possibilities has been covered. And as a member of a Chinese community, one thing we cannot change is Vancouver is the best city in the world to live in. So the demand is there. My next question goes to Mr. Hao Shi from the Agricultural Bank of China to give us some lights on why Chinese buyers are so interested in the real estate here in Vancouver. Is there any special factors, like the currencies or interest rate or loans, like you may think of, that will boom the whole market?
I guess Vancouver, especially in Canada is not only open to Chinese interest right now, really go back all the way to '86 when the Canadian Expo held in Vancouver. That's where start Chinese interest from that. So since then, the interest never really slowed down, especially in the year 2000 when more majority of immigration from China, mainly from mainland China, and also kind of coming along with the Chinese economic growth. But lately, special interest from Chinese investment, I personally think the threefold. One is a slowdown in the Chinese economy. So people looking for a good place for asset valuation. So that's a place thinking about Vancouver. It's a long-term place for investment. Second, lower Canadian interest rate. And especially last year, the very favorable foreign exchange rate between the Canadian dollar and the Chinese yuan. So third one, it's economic slowdown in China. So that's three factors, I think, all contribute the investment in real estate in Canada, and particularly in Vancouver and Toronto. And if someone pay attention to the past history in the last 20 years, seems like whenever the Chinese economy slow down, then there's going to be a price spike in Canadian real estate market. When Chinese economy doing much better, the money actually move back to China. That seems to have a strong data support. So in this round, I guess, because if you follow the news cover in China, the different voice regarding what's the future of Chinese economy in next, say, 3, 5, 10 years, one popular verdict is the long-term growth could be the L shape, which can be kind of slow for quite some time. That's basically give people sort of incentive looking for some place to preserve their fortune. So Canada, in many different ways, becomes sort of like one of the top choices. So that's basically will not be changed even this policy. The policy itself is always its own kind of life cycle, and there can be different debate. So I guess it will have a short-term psychological impact, but in terms of total market impact, personally, I'm not sure it's going to be so huge, especially if anyone reading the KPMG published the number last week. So in compare month to month, in June, the total number of sales actually is slowed down a little bit, 7.7 drop, but the listing is increase, same as the price. So that's basically give indication. The price still kind of increase, which means partially it could because the inventory kind of there. And also we have some sort of client feedback. They start feel the price to the point need to be hold their money to wait for a little bit. So in that, all these factors considered together, I think will have some impact, but will not change long-term picture. Yeah.
Okay, great. Thanks for that. So we've heard about the demand side to say why the Chinese buyers are rushing into Vancouver and buying houses. Even that we have raised, like the latest policies has raised the property transfer tax to a high level. But on the other side, though, we know the prices are determined by supply and demand, and we've seen lots of cranes here, so new condos are rising up, meaning like we can imagine that the suppliers are also rising up. So does it mean that we're getting to a turning point and the property price is gonna go down somehow? So I will pass this question to the gentleman on my right, Mr. James Gu.
Yes, so when we look at the Vancouver real estate market, when we're talking about overheating, we're really actually looking at two problems. One is obviously Professor Davidov has just mentioned foreign money coming in, a lot of them from China. But another underlying force for driving up the price is the natural population growth, immigration to the city, not only from overseas, but internally from different provinces in Canada, because this is such a nice place to live. The economy is less dependent on oil and gas, various factors. So when we look at the supply side, the Vancouver metropolitan government is just not being able to keep up with the speed. Even with the current rate of new permits, new rezonings, it will maybe increase the supply by another 5%.
Only 5%, are you sure?
Yep, overall, yes. So with the 30% or more increase in housing price, it's just not going to keep the price increase at bay. And if we look back in 2015, the huge surge of real estate price in Vancouver was not only driven by foreign monies coming out of China. Another big element is the lower value of the Canadian dollars and the lower interest rate environment. So I think it's unfair to say that foreign buyers is the only element that's driving up the price. I personally believe that the new increase in property transfer tax for foreign buyers is more of a political show in the short term. It might create some panic in the market, but in the long run, it will not have a sustained effect on keeping the price down. Only increasing in supply is the long-term solution. So I run an investment firm, and when we look at investment in Metro Vancouver, I do believe there's a significant risk build up, especially in the core area where land price has been increasing for the past decade. But when we are looking for safety of our principles and looking for a reasonable return, I believe a long-term development project increasing in density is a place to safely deploy your money. Simply put, if you look at Vancouver compared to other metropolitan cities in North America or across the world, we'll see the density in Vancouver is still very, very low. We're just at the beginning of the transformation of the city to become a true metropolitan city that has a much higher density, more apartment blocks, more efficient use of our public transportation system. So during this process, I think there are numerous investment opportunities. And then one last point that I want to touch upon is about single detached homes. The reason why there are a lot of political first about the rise in real estate price is because people have the unrealistic hope that the next generation or the next generation is going to live the same life as their parents, their grandparents. Everybody's going to have a big yard, living in a detached single-family home. These days are gone. We will never go back to the same age again. And in the end of the day, I mean, we're already seeing that in Vancouver West Side or West Vancouver, single-family home become a luxury item. It's not something that the average person can or should desire. But on the other hand, I think a speed up of the rezoning process, faster permit, and faster development with condos, affordable condos and townhouses is the final solution to Vancouver's real estate crisis.
Thank you, James, for your input. And we've heard about the demand and the supply side. Again, my question goes to Professor David Off. Still, it's going to be around the latest raise of the property tax. And do you think that's going to be one of the series of the policies that's going to be introduced to cooling down the hot market here in Vancouver, or it's just a one and off thing? Like, is it going to be any other measurements be taken now? Because that really will make huge impact then.
Yeah, that's an excellent question. As you may know, some colleagues and I had proposed a different approach to taxation, one not based on nationality, but based on you pay a higher property tax not for being Chinese, but if you're not working and paying income tax, which I thought would be more fair. I have heard the tax that the province imposed on foreign buyers may violate NAFTA, the North American Free Trade Agreement. I don't know. So if that tax is voided, they're going to have to go to some other demand-based solution. I completely agree with James that supply is important too. If you went to Winnipeg or Dallas, Texas, or Des Moines, Iowa, half of Beijing could move in and nothing would happen to price because you can keep building and building. There's no ocean, there's no mountains, there's not even much of a downtown. Vancouver is different. The ocean, the mountains, it's hard to build, and when you get oceans and mountains, you get people who like environmental quality and will fight to preserve low density, clean air, trees, etc. You cannot, in my opinion, allow individual municipalities, Vancouver, West Vancouver, Coquitlam, et cetera, to make their own zoning rules because mayors will listen to the loudest voices, which will be homeowners who want to preserve the neighborhood amenity. And until prices just get so high that the appeal of adding vertically gets too great, I think you maintain low density zoning for a long, long time. So I think if there were a next logical step, the province might step in and require some additional density. I don't think there's the political appetite to do that, and the reason is a tax on Chinese buyers or foreign buyers, that's very easy for a voter to understand.
Exactly.
It's a simple solution. Saying, well, we've modified municipal charters so that the power of zoning now resides in the province, I think that's a bit of a mouthful for a voter to understand, but savvy homeowners will still understand that their low-density neighborhood is under threat, and they won't blame the mayor, they'd blame the province for that reform. So I'm not optimistic that we'll see the upzoning, except for, eventually it follows the market. But slow and steady upzoning is not going to bring affordability if we've got rapid price increases. And that status quo in a low interest rate environment with political and economic uncertainty in China and elsewhere in the world, it's not going to be enough. So I suspect we'll see this demand side. We'll see some federal intervention on money laundering, but I don't know how far that goes or how relevant it is to most buyers. So I think we've probably seen the biggest moves. But I was very surprised. So I really did not expect this move by the province on Monday. So it remains to be seen.
Okay, well. So actually, I did heard from the media you saying that there are lots of loopholes, like people can hide their identities. But if there's more measurements are taken, for example, on the loan side, do you think the huge impact will actually crushing the whole real estate market, or is there any other internal or other buyers will come into always flooding into this this city and keep the price high?
Well, no, I think and I appreciate James's point. I think there's many factors that make Vancouver expensive. And for example, weak oil, if you want to bet against Vancouver, I'd say buy oil stocks because at Sauder, many of our students, when the economy is good, go to Calgary for jobs. That's dead. So young workers have to be in Vancouver who were born here. The exit option isn't as attractive. Of course, the weak currency that you mentioned. I mean, the price of Vancouver real estate went from, 6 yuan to 4.5. And now it's up a little bit, and the market has slowed down. So the exchange rate is also embedded in oil because we're very much of a petrodollar. That having been said, without foreign demand, look at a Seattle or a Portland. Those are places where it's very hard to build. You've got a lot of natural obstacles, political obstacles to building. And in the US, owning a home is more tax favored than in Canada because you can deduct mortgage interest and property taxes from your income tax, which means the government can pay up to 25% after a threshold of your payments. So the price to rent ratio in the States for a local taxpayer should be higher than here, but in reality it's much lower. That tells me that these prices must be importantly driven by foreign demand, which matches a lot of our intuition. So if there are onerous restrictions on foreign demand, I think that is a real threat to home prices here in Vancouver. So again, the ability to hide money, not hide, sorry, the ability to find ways around the tax or the willingness to pay the 15% tax, I believe, are critical to the health of this market, at least for the next few years.
Great. So, Mr. Hao Shi, do you have some extra opinions or giving us more of your thoughts about why Chinese investors, like what are the other investment options do they have besides the real estate? Because it seems to me that every Chinese person coming here, and the first thing they're doing is just looking for a home. And that makes this particular community maybe a scapegoat for the whole blames. People are easy to blame those outcomers and newcomers. And is there any way for the Chinese community to to get rid of that kind of blame? What do you think?
Yeah, I like his question. It gave me a chance as a banker to promote some banking business, right?
I know, yeah. Please, go ahead.
I guess first, I think, yes, real estate is like a natural love for Chinese people. Because especially in China, you own a piece of land. It's like a dream for so many people. So it's a love actually extend to Vancouver. But in terms of investment, even local real estate fund company, they think Vancouver is sort of in such a high end. They can stop looking to Vancouver. They start looking at Portland, Seattle, and one senior mutual fund company once talked to me. He said he's waiting for bloodshed in Calgary. And at the end of this year, so probably end of this year is the time. It's a good time to invest in Calgary, the real estate market.
On the houses.
Houses, yeah. But at the same time, I just came back from one investment forum in Calgary for Stampede Festival. They also promote diversified investment opportunity in Alberta, especially in the agricultural area, of course. My bank is the Agricultural Bank of China. And I think that's really some more promising and long-lasting area people should pay attention. Give you one story. This one so-called breakfast food, baby food from Australia called wheat bisque. You probably heard about it. Weetabix, yeah, Bix. So that box on the shelf in Australia supermarket only costs $4 to $5 Australian dollars. However, that product has been used in a popular TV show in China. Then online price in China for the same product jumped to 50 Australian dollars. I guess this basically shows how much tension people have regarding food quality, safety for Chinese middle class. That's where, because after 30 years of fast development, the pollution not only limited in the air, also in the water, in the soil. So that's demand. It's kind of soaring. So that's where Canadian economy, so many opportunities. By comparison, I once helped set up a meeting between the BC delegate with the Central Bank of China. They showed the number like roughly 10 years ago. Australia and Canada both take about 1% of China total international trade. But now Australia roughly is 2.3% of the total Chinese.
Closer.
Yeah. However, China, even the volume has increased. All the government have kind of brought like a huge increase the volume dollar amount, but percentage-wise, Canada actually dropped to 0.8% of total Chinese trade. So I guess that's where agricultural, food processing, environmental technology, that's where people should pay attention. Particularly if you know the Chinese market very well, you know wherever you have some policy, we call it have government policy dividend, which means you have central government policy support, you normally have a good chance see the stock price soaring. So that's where I guess food, agricultural, clean tech, that's where Canada used to have a great place to look into opportunity. But the reason we didn't hear too much of Canadian technology in China before, partially to blame US, because they're so close. They normally take things away before they're still a baby. So now, since there's so many Chinese investors in Canada, in Vancouver, that's the perfect time. Look into other opportunity like this area.
Yes, I think what we need to do here in Vancouver is to promote the local economy, which can support our house here. And because we do love living here, and we want to make this sustainable, right?
One more thing. I just one more thing. Personally, I feel the current tax imposed by provincial government is really kind of they should run target. I guess I guess normally think about all the major cities like San Francisco, New York, Silicon Valley. The price is high, but they also have a economy to support. That's where province should be more focused on economic development, make Vancouver become a global city. Actually, it's a global city back '86 when the postal expo held. The issue I feel like here in Vancouver is a global versus local. Many people grew up here. Their mindset is still like a local, small town kind of mindset, where Vancouver is not small town, local anymore. So we have to face the reality to promote head office, the economy in Vancouver. That's where young people have a better job, better pay to support the soaring housing price.
You know, just to build on what you both said in terms of the importance of the local economy, when I moved here from California, and California in the US is a bit of a joke for its low property tax rates at 1.25%. When I opened my property tax bill in North Vancouver when I moved here in 2009, I thought maybe it was a joke or maybe this was 1 month of property tax. The whole year, and now it's fallen to less than 0.5%. We tax the daylights out of earnings. At the top rate, you're close to 50%. We've got high sales taxes, and those, of course, are business killers. If Vancouver wants to grow, we have such an easy option, which is raise property taxes, cut income and sales taxes. That's a fair way to help affordability. That puts the burden on property owners, takes it off of people who work for a living. It has nothing to do with nationality. It helps develop the economy. The problem, once again, incumbent homeowners, particularly retirees, who would be hurt by the property tax and not helped much by a reduction in income taxes. So political will is very important, but I completely agree that getting an economy commensurate with our quality of life would be really critical to a sustainable economy that works politically.
Exactly. And just now, Mr. House, you touched a little bit about when you were talking about the demand from Chinese, said that the house in China also has been rising up. So if I am Chinese, I own a house in Shanghai or Beijing, I can easily sell them off and to buy a house here in Vancouver, and which will give me better quality life and clean air and better education to my children, so which seems to be a very good option for us. So the question goes to, will the real estate market in China will still rising up? Why does it go up so kind of unreasonably, and will that last? So I will just pass this question to Mr. James.
Thank you. Before we get into that, I want to just touch upon the investment opportunity issue just a little bit more. I think a lot of the Chinese investors coming here, like, of course, first thing you want to do is you want to buy a house, a nice one, to move your family here. But what's next? Right? If I have a stock of cash, you're looking for a place to deploy, and I don't know anything locally and not familiar with the political environment, then naturally the only thing I'm looking at is another house, since I already made handsome profit off the first one. So I think the real issue here is not how to keep foreign money out of Canada. Rather, it's a question of how to generate enough investment opportunities locally. It can both preserve the wealth of foreign investors and help the local economy. So Maxwell's Capital, which is my company here, we not only looking at real estate development project, but more interestingly, I think in Canada we have a very vibrant startup community, especially in clean tech, in agriculture, like Mr. Shi just mentioned, and oddly enough, Canadian marketplace is largely ignored by a lot of international VC funds, angel investors. If you go down to California and talk to Silicon Valley investors, if you're from Canada, they don't care. They don't care how much revenue you make. They don't care how much, sales you have signed. They only focus in U.S. Well, that sort of pretty much can apply to China as well. So there's a big undiscovered gold mine here in terms of equity investment, in terms of new tech, high tech companies. But it takes time, and it takes knowledgeable guidance for first time investors to participate in this market. And I think there's a lot need to be done to package it, to structure it so that it becomes more accessible for foreign investors. And if they can find better return, low risk for their money, why not? Why put all the eggs in one basket, right? So going back to Betty's question about the Chinese real estate market, we all saw a surge of price just very recently in first-tier cities in China, Beijing, Shanghai. I just made a quick trip back to China a couple months ago, and frankly, I was shocked by the housing price now in Shanghai and Beijing as well. So basically, it costs more than 2 million Canadian dollars just buy an average apartment building in a city center, and it's outrageous. $2 million come here, you can buy a single family home. Yeah, probably not in the downtown core area, but maybe on the east side or Coquitlam or something like that. So I think as long as the Chinese real estate market keep its current pace, it will influence Vancouver real estate market. Whether or not that's sustainable, personally, I have a lot of doubt about that. I think the recent increase in China, it's not driven by supply and demand. It's driven by external forces, especially the equity market crash of last year. People are seeking safe haven for their money. For majority of Chinese people who doesn't have the channel to transfer their wealth outside of China, the only place they can seek refuge is, again, back to real estate. So, and this creates an enormous asset bubble in China, not only reflected in the real estate market, but also in the equity market, because of the public market had a big crash last year. Now the private equity market, the valuation in China is many times higher than in North America. So this could be interpreted as an investment opportunity as well, but this cannot sustain in the longer run. So back to your question, I do not think the rate of growth in Chinese real estate market is sustainable.
Fair enough. Okay, my last question actually goes to every guest of this panel. It's a general question. In general, do you think that the real estate here in Vancouver is still a good investment option, or it's already getting to a dangerous point that we probably got stay away from it? Okay, I'll start with Mr. Hao Shi, and it's the same question to all guests.
I think real estate market in Vancouver is definitely the high end, especially if you're looking next few years, the pace probably will be slowed down. Not only because of this special policy, the tax policy, also other factors can be economy and other things can be impact. One side, the government of China really sort of tighten up the money flow. That's from bank's perspective. We really can feel that trend. And if you talk, many of the local real estate agents, they probably tell the same story. So, but I don't think it's going to be a huge drop. We have a chat talking about people speculate the housing price in Vancouver are going to drop 10%, 30%. I guess it really depends the area we're talking about. The same thing like you're talking about a housing price in China. Really, that make no sense. Even talking about housing price in Beijing, really depends talking about within third ring or outside also sixth ring. That's really totally different ballgame. So my personal feel like in the Vancouver city, it's like a core area, the price could be slowed down more like back in 2011, 2012. But I don't think it'll be a huge drop. But after, like say, say Langley or the outside the boundary of Greater Vancouver area, because those housing price, housing sales heavily depend on mortgage. That's if Canadian economy still can keep a current pace, if any kind of interest rate increased because of pressure from U.S. interest hike, that can be impact together and see the housing price could be down a little bit more.
Yeah, let me try some risk factors and then an optimistic message at the end, because I think the answer to your question is both. There's tremendous risk in the short run of, I don't know, tremendous. I think there's a significant chance of a downturn in the short run. Why do I say that? What you mentioned, in the US, when we had our housing downturn in the mid-2000s, it wasn't in the best locations that you had the worst downturns. It was in the so-called drive to qualify locations. That is, you keep going as a low or middle income earner until you can qualify for enough mortgage to buy a home that you demand. Well, those drive to qualify places aren't protected by mountain and ocean. That's where you can get the new supply. So you get people overextended on mortgages, dependent on valuations that can fall when new homes get built, when people start losing their jobs, when the real estate craze slows down a little bit. So I do worry about a downturn in that way. I think you're sort of beginning probably to scrape the bottom of the barrel in terms of the quality of borrowers you can find who haven't yet bought a home. So that's risk one. Risk two, I like to look at stocks as an alternative investment. So I own a bunch of Genworth Canada. That's a pure real estate risk play. They insure mortgages of lower valued homes. And that stock, that company earns about 12 cents on every dollar invested, whereas, of course, a condo in Vancouver earns about 2.5 cents on every dollar invested. RBC Bank earns about 8 cents on every dollar. And now you might say rents are going to grow in Vancouver, but aren't bank earnings going to grow as well? Again, I point to the states where taxes say price to earnings ratios should be higher than here, but in fact they're much lower. So you look at comparative investments, and like Beijing and Shanghai, the price level is hard to understand. That said, there's a disconnect, I think, arguably, between all real estate valuations, especially in the States, and what the yield curve tells us about interest rates. There are people, very smart people like Larry Summers and Paul Krugman, who think that low interest rates are here to stay, at least for the foreseeable future. And the bond markets agree. 30-year bond rates are barely greater than 1-year bond rates. Nobody seems to believe that we're going to go back. You know, when I bought my first house in 2002, I thought I'd better lock in and get a fixed rate loan, which is available for 30 years in the States, because interest rates will never go below 7%. And when I bought here in 2009, I said, I'd better lock in. Rates will never go below 4%. Okay? So if rates are going to stay in the 2-3% range for mortgages, if you're getting CPI, Consumer Price Index growth, plus real growth of rents, because as population grows and supply barely keeps up, rents are going to grow over time. So if you've got real rent growth and 2.5% cap rates and 2.5% borrowing rates, other than the risk and liquidity issues, housing is underpriced in Vancouver and massively underpriced in places like San Francisco and Los Angeles. There's a disconnect, I believe, between real estate and what the bond markets are telling us. So if San Francisco is too cheap relative to Vancouver, does that mean Vancouver's overpriced, or is San Francisco underpriced? I think either way could be true. So there is certainly the potential for accelerated growth here, but in the short run, I believe tremendous risk.
Yeah, so I'm just going to pick up from Professor Davidoff. I think if you look at the cap rate, the return on real estate in Vancouver, it hardly justifies the price, although it's still better than China. right? If you ask what the local wealthy individuals are investing, it's interesting. Last week I was with one of the prominent local investors and asked, like, what kind of things are you guys investing in these days? They told me real estate, but not in Vancouver. You know, they invest in apartment and office buildings in Texas. And the rental alone can not only pay down their mortgage, but also can provide them with a very stable income. And, but that's not the case in Vancouver. So if you buy a condo or you buy a house purely for investment purpose, the only way that you can get your money back or make a handsome profit is to wish that the market will keep going up at the current speed, which we all know might not be the case. So I want to look at this at a slightly different angle. We can talk about the high price and all the risks that's built in, the mortgage rates, interest rate fluctuations. But if we ignore all that, we just look at the driving force, some of the driving force of increasing density and population growth. And we like to look at it as a manufacturing of goods, not just a purely investment in a property. So what I like to do is to participate in development projects where there's a hard demand, lower price, affordable units for new families, older older baby boomers who wants to downsize, who doesn't depend on the mortgage as much. The math is easy to calculate because you have the land value, you have the bank loans, you have the construction cost, and taking all out, you can make a reasonable return in Vancouver today by participating in real estate development projects. It will take away the risk of a certain risk of a market fluctuation because you are not going to buy and hold and hope for the best because all the return is built in when you construct real estate projects, just like you manufacture goods, where there is a hard demand and you are basically satisfying that demand and making a reasonable return on your money.
Okay, sound fair enough. I know that the question goes on, and this is just a topic that never ends. And I know you may have questions, like in all the audience. I'm sorry, but I've already used up all the time I have. So what I can say is all except for Professor David Off, all our panel guests will be here until the end of the session. So if there's any questions, feel free to come over to us and ask them, and then we're glad to see each other. And I'll pass it on to Professor David Off.
tom.davidoff@gmail.com. I'm so interested in continuing the dialogue with the Chinese community in Vancouver. Just Google me, call me, send me an email. I'm always happy to talk.
Thank you, Tom. Thank you very much. And that's the end of my panel. Thank you.